Hello traders, this is Debraj. Today we will discuss about imbalances in order flow. So this is a very simple topic in order flow, imbalances. So we have buyers imbalances and sellers imbalances. So what are those imbalances mean? So like in order flow software, we have settings where we come to know that at a particular price level how the buyers are outnumbering sellers by how much ratio, 4 is to 1 or 3 is to 1. We can set that ratio also in the software. So what I'm trying to say is imbalance is like, okay, because now you guys already know how the order flow candle looks. So if I draw a simple chart, simple diagram for you to just tell you that how order flow candle looks, say for example, if you know this is the footprint chart looks, and as I told you that if this is a footprint chart, buyers always go for the asks. They go for the asks. Aggressive buyers buying like this to the ask, and sellers always comes like this, hitting bids, hitting bids, hitting bids like this. So this is how order flow footprint works. So now this is I'm trying to say is imbalances when the buyers hitting the ask, then how big buyers are coming here. So when the buyers are hitting the asks, then how they're outnumbering the sellers. What is the ratio? So let me pull out the chart for you guys so that you'll understand here. If you see buying imbalances, for buying imbalances, always remember these blue numbers. See this blue on the body of a bullish candle. If you see this is a bullish footprint, and if you see this 30, 35, 80, they are colored as blue, but where other numbers like 71, 41, 55, those are not colored in blue, they are just colored in black. But these 30, 35, 80, these three numbers are colored in blue. So what's special with these numbers? If you remember what I said just a few minutes back, that buyers always hit diagonally asks like this, like this, like this. If you compare 6 and 30, here you know that buyers are outnumbering sellers by 5 is to 1, because 30 divided by 6 is 5. Here if you see 7 and 35, so buyers here also outnumbering sellers by 5 is to 1 ratio. Here if you see 15 and 18, compare 15 and 18, so almost I think, yeah, 6, 15, yeah, almost more than 5 is to 1 also here. So these are called imbalances. So when you see these imbalances, that means you are confident and you know that really buyers are present in this footprint. So if you're like holding a trade for a long time, and if you're seeing these candles, order flow candles with these buying imbalances coming, so that means buyers are strong, still buyers are strong. So that will give you confidence to hold the trade also, and we can use this buying imbalances or selling imbalances at our point of interest to know that, okay, yes, buyers are also now strong. Here if you see 6 and 27, you have to compare diagonally like this, 6 and 27. So 27, if you see, this is also a buying imbalance here. You're seeing here you see 2 and 15. 15 is colored as blue. Why? Because this buyers has outnumbered this 2 by at least 7 is to 1. 15 divided by 2 is more than 7. In your software we can adjust this ratio, that how much ratio you want to see, but like minimum it's a very good setting that if you maintain the ratio 4 is to 1. So whenever there is a difference of or not difference, when the buyers are outnumbering sellers by at least 4:1, then only I need to see these blue numbers, otherwise I'll not see the blue numbers. For example, we're not seeing here a blue number 17 and 55. See, 55 and 17, we're not seeing any blue numbers. 55 is not blue. Why? Because the settings is 4:1 for me. So, and 55 by 17 is not 4. So that's why this is not colored as blue. Wherein 80 is colored as blue, because when I compare 80 and 50, I'm seeing that buyers are outnumbering sellers more than 4:1 here. So this is called buying imbalance. Now let's talk about selling imbalance. It's just opposite of buying imbalance, where sellers, as I told you also before, the sellers are coming diagonally to hitting the bids like this, from right to left down like this way. Buyers goes this way diagonally, going up, hitting asks, and sellers hitting bids diagonally downside. So if you see these numbers, when you see these red numbers on the bodies are called sell imbalances. So when we see these sell imbalances now, we see when we are seeing that sellers are outnumbering the buyers by 4:1 at least minimum. So if you compare this 18 and 4, you'll see that the difference is more than 4. I mean, the outnumbering is 4:1 because 18 divided by 4 is more than 4. If you see this 27 and 5, because as I told you, the sellers always come diagonally. Sellers always hit the bids diagonally. So if I compare these numbers 5 and 27, if I compare like this 5 and 27, because now you see the 27 become red colored. Why? Because this 27 outnumbered the buyers by more than 4:1 ratio, because 27 by 5 is 5 point something, and in your software you can set this ratio that when you want to see these red numbers and when you see this buying imbalances, that blue numbers. So it's all you can set. But for my personal advice, what I can see in my, what I can tell you from my experience, that at least you should keep minimum 4:1 ratio, so that at least sellers should outnumber the buyers by at least 4:1. Then only you must see a selling imbalances. So that means these red numbers. I hope it is clear, buying and selling imbalances. So let's go to the chart. We have, now I can show you the real chart. What is buying and selling imbalance? Just few examples. If you see here, let me zoom out the chart a little bit, and you see the software, why these numbers are red here, right? Because if you compare 1 and 38, then you see there's a huge gap, like huge difference, and 38 by 1 is almost 38 times, so 38:1 ratio. So that's why it become red color. You see this one 2 and 17, there's a huge sell imbalance. So these are the imbalances you cannot see when we are seeing a normal price action chart, normal candlestick chart. This order flow chart will tell you these are imbalances, and these imbalances are nothing but, I call it as a pressure. When this imbalances happens at the body, then we call it as a pressure, that yes, bearish pressure is there because sellers are strong here, sellers are strongly joining the party. So this is called imbalances. Now this is sell imbalance, and similarly if you see, these are all buying imbalances. If you compare 2 and 45, huge gap, huge difference, more than 4:1. It's almost 22:1 maybe, like that. These are all buying imbalances, these are all selling imbalances. So that is all about imbalances, buying and selling imbalances. See here, huge selling imbalances, the difference, see the gap, 9 and 92, almost 10:1 ratio. 9 and 92, almost 10:1 ratio. So these are the points when you need to see in the order flow that yes, sellers are getting stronger, sellers are getting stronger. And when you're getting these setups on a area of interest, that is, the one you are waiting for to take those setups. So next thing, okay, now we discuss imbalances, buying and selling imbalances. Now we have another thing called stacked imbalance. There's nothing but when you see three or more consecutive imbalances one after another. I mean to say, when you see three or more than three consecutive imbalances. If you see here, 1, 2, 3, 4. See, more than three or more than three. When you see consecutive, then that becomes a stacked imbalance. So when I see stacked imbalances, those are my entries actually. I put pending limit order. See, this is a stacked imbalance. See, because this is 1, 2, 3, 4. 4 selling imbalances, one after another. There's no gap in between. See, 1, 2, 3, 4. So these are sell imbalances. Normally, when I see these sell stacked imbalances and buy stacked imbalances, I can wait for an entry here. This is the setup if you're seeing 6C USD CAD. So in this setup, we have everything. We have divergence here. We have a single print. What I'll discuss this later. We have a caught at the top of the candle, and we have a huge imbalances with good delta shift. So when I got a big candle like this, I cannot enter simply after the closing of the candle because I have seen there are stacked imbalance here. So better to not to enter after this candle closed, better to wait for the retracement here to the stacked imbalance, and then you can have a pending order somewhere here, and you can wait and see what happened. Then after that the price dropped. So this is the setup we also took this week. I mean, yeah, this week, or yeah, maybe last two, whatever you can call it. Last week we took the USD CAD buy trade, if you remember. And always you know that when we are buying USD CAD, that means we are looking for sell on 6C, right? So that setup was fully based on imbalance and stacked imbalance mainly. Why I said, because if you go to this USD CAD setup here, and you can see that USD CAD was on a nice IC, 4-hour IC. The price was coming down here. So this was my point of interest. I was waiting for the price to come here, and then I want to see some kind of sell setup on 6C so that I can buy USD CAD. So when the price came here, I went to 30 minutes and I saw this candle. This was the candle, this green candle. This green candle on USD CAD means the opposite, the inverse is this red candle in 6C. So what this 6C has given us? This 6C has given us a volume divergence, a single print, caught at top of the candle, and a huge imbalances. So this imbalance is telling you, yes, really sellers are joining the party. And when I see this, I just simply did not enter from here. I know that there is a stack imbalance somewhere above, so I can have a pending order like this. So that's why I gave this pending buy here on the group on that day. And I mentioned you that that's a high probability trade. If you remember, I told everyone that this is a high probability trade I'm giving you, because if I want to show you what I'm trying to say is few academy things. Yeah, channel. Exactly. On that day, I told you that USD CAD. Yeah, I said that USD CAD is a from happy to track. Okay, yeah, see, I gave the setup USD CAD chart high probability setup here, and that was the setup. You see USD CAD here on this area, and from there the price moved along. So this setup was totally based on because I wanted to buy USD CAD, so I wanted to see a sell setup on 6C. So that's what I saw here. I saw the imbalances here and see the differences, huge differences, and also I got a stacked imbalance there. So when I got the stacked imbalances, I put a pending limit order, and I have all other confluences also here, our divergence, COT, and those things. And you saw after that price just melted down like that. So today we're talking about imbalances actually, so I hope it is clear. The imbalances also we can use sometimes, when we are already on a trade, and when I see that okay, it is also the order flow also supporting us, then we can hold the trade. Okay, so those are the things also. This imbalances. See here at a low of the day, okay, at the low of the day or previous day, when I see there is imbalances coming here, see imbalances, how buyers are strong here. How check the difference, 179 and 13. As I told you, when buying imbalance happen, it happens diagonally. So if you see 13 and 179, the gap, the difference is huge ratio difference. So bigger than 4:1 also, maybe bigger than almost I think 20, not 20, maybe 15:1 gap. So that means buyers are very strong. There is no space for sellers here, and that is how we saw why the price is flying. So these imbalances will help you to stay on the trend, because when you catch the trend, if you just follow the imbalances, okay, yes, are you really getting buying imbalances? See these candles, you don't get any imbalances, so you don't know what's happening there, okay. But when you see these imbalances are coming, so you're sure that okay, yes, you are on the right track, so you can hold the trade. It's a very beautiful information to have when you're buying and selling. And yeah, these are called stacked imbalances, stacked, because after this big candle, after this big candle, I cannot trade just here. I'll wait for some retracement to some of the imbalances, and then I will take the trade. This is a nice setup actually. See, this is a very good setup, very good setup. We have everything almost here, so this is called 100% trade. Price just went like this. Very good trade. Oh, I lost it somewhere, but it was a very good trade. So this is all about imbalances. So just recap that imbalances are nothing but when buyers or sellers outnumbering the other parties by some ratio, which you can set from the software. I want to show you how you can set it up. So here, order flow trader, if you see the software, when it goes software, this whole thing is customizable for you. So you can according to the market you are trading, you can customize it properly. So here we have ratio. We set that okay, how much imbalances you want to set. So if it's 400 and 100, so that means that I am doing with a 4:1 ratio. So that is I'm going to show you here. It's like, see here, imbalance trigger in percentage. I made it 400. So 400 means nothing but 4:1. So I want, when is there is difference of 4, multiply by 4 differences. When buyers are outnumbering sellers more than 4:1 ratio, then only the red or the blue numbers on the candle will appear. That's why it's 400. You can change it also according to your requirement. Okay, so that is how, why you saw this here, why this color is, yeah, I mean to say this color, see, this